Hey everybody, it's Mark Saunders with Saunders Realty. So I have not done a market update lately, so I wanted to make a quick real estate market update for Forsyth County, North Carolina as of today, which this is June 2022. Here's what's happening in your real estate market. So I'm sure you've been hearing about all the news about the Fed raising interest rates, the real estate market slowing down or possibly heading for a crash. I hear about it all the time too, but let's look at some of the numbers, see what's going on. So the Fed did make a huge decision this week, raising interest rates 0.75%, which is one of their largest ones since I think the mid-90s. So mortgages are getting more expensive. But let's look at some of the numbers to see what's going on in the real estate market for Forsyth County, North Carolina. Average sales price of a home continues to go up. It just went over $306,000. The average sales price now is $306,684. That is up 15.9% from the same time last year. So home prices continue to rise. Days on market. Now this is going to be one of the leading indicators to show if the market's really slowing down. Days on market for Forsyth County, average days on market is 13 days. So that is down 43.5% from the same time last year. So even though interest rates are going up, houses are still selling at record pace. Homes for sale, the number of houses that are on the market, what is our inventory like? We have 846 homes on the market. That is down almost 7% from the same time last year. 846 homes. It seems like these numbers can't get worse than they do. Keep in mind, our county, Forsyth County, has a population of over 370,000 people. 370,000 people, only 846 homes. That is the big reason why the real estate market's price per average sales price, days on market is not going down. We just don't have the inventory yet, but it looks like it is starting to trend up a little bit. It'll be curious to see where that number comes in next month. So what's our big takeaway here? Really, the real estate market's still very, very hot. It's an inventory issue. I think there's two big things that we're kind of seeing. Number one, and I've been saying this for quite some time, is the amount of Wall Street firms coming in and buying real estate. Here's a couple articles for you just to keep in mind how big this is. Wall Street-backed landlords now own more than 11,000 single-family homes just in Charlotte. I couldn't find the number directly for Forsyth County. It's a lot. The amount of houses that they bought. 11,000 homes in Charlotte. Here was a very interesting article that I came across. It talks about Texas. Wall Street scooped up a third of Texas single-family homes sold last year. So they bought a third of the homes. The thing about that article, which is a little misleading, that's out of all homes they bought a third. If you look in that price range between, say, 100,000 to 300,000, I would almost bet you Wall Street has bought 50, 60, maybe 70% of the homes in that price range. So first-time home buyers, people in the price range that are actually going to live in the house, really do not have a chance. And that's the thing that gets back to the other big thing going on, raising interest rates. So every time the interest rates go up, homes, the price for mortgages get more expensive. It eliminates a group out of the market that can no longer afford that price. So think of interest rates as a giant floodgate. If interest rates are 0, 1, or 2%, the floodgate's wide open. Water can rush through it. Every time they raise interest rates, think of that floodgate closing a little bit more, less water can go through. That's kind of what's happening with buyers in this market. So again, that double whammy for first-time home buyers or people in that 100 to 300,000 price range, you're very sensitive to interest rates changing because your monthly payment's going to go up. So add that on top of competing against Wall Street for cash, for houses that they're going to pay cash for, makes it very, very hard. I'm going to do another video shortly about Wall Street buying and everything. One other interesting fact is housing new construction has actually dropped some. For the reason inflation's coming in so high, it's causing some of the new construction to slow down. And so again, we have low inventory. We're doing nothing to help that inventory levels start coming back up. So as of right now, the market's really hot. Do I think if interest rates keep going up, it's going to slow down? Yes, but I think it's going to slow down on primary occupants that are going to be living in the house. It's not going to slow down Wall Street because they really don't have anywhere else to put their money right now, so they're putting it in real estate. So let me know your thoughts, comments, leave them all below, or email me. Let me know your thoughts on the real estate market. What are you seeing in your area? Thanks.